All right. So before I dive into some of the ones that I would like to go over, are there any particular trades that you specifically wanted to go over that you might have had some questions about?
I think most recently is that Oxy from April 5th.
This one, where you lost 4%.
Yeah. That was more. I think that was my biggest loss from April. So just wanted to go over it. I kind of looked at it and made some few notes on it. I don't know if you would agree or maybe give me a few more pointers onto it.
See, so failed breakout in the first 3 minutes. Shouldn't move stop below entry to minimize risk or below. And did not get full risk to a breakout. I mean, this is tough because, you know, the crap here. Did you get back into this later on, like through 59 again? Because I know it's not going to show the trades.
Right.
Did you or no?
I did. That should have been.
It might be on like another entry. It won't show all the trades. That's my only thing. But I mean, again, the trade failed that day. So you bought 59, where you got out 56.75, or under the prior low a day. I mean, that all makes sense. I think the tier, like the fact that you gave those 2 stops, I don't think is really necessary. Because again, this, we're expecting it, like we're expecting this day, and we didn't, you didn't get it that day. So I think the sooner you're able to get out of that, probably the better. Even not even having to give it this much room. Even this first stop, like I know you gave it $2, but there's like when you're with game plans, you obviously want to stay with the game plan. But when the trade is immediately failing, those are the times where it's like easier to kind of ditch that game plan. And then when the name is working, that's when you really want to stick with it. So it's like this day, for example, like, okay, I buy 59, it rips $2 higher. I want to really give this versus 57 because this trade has already shown me it's working. It's worth that risk. And then this next day, doesn't matter. This next day, these aren't shaking out because you've already been immediately right. That's when we want to stick with the game plan like this time. These are the times, okay, I'm buying 59. I'm expecting this massive breakout. It goes $1 in my favor, kind of off the open, and immediately starts to reverse. That's when getting out as quickly as possible often is going to be the best route.
Okay.
So again, like with the winners, when you're immediately right, sticking with the game plan, of course, is going to be more beneficial. And that's oftentimes when you want to do the opposite. Like you're immediately right, and you want to take some profits where that's the ones you want to stick with. And when you're immediately wrong, those are the ones that you're like, I want to give this the right amount of room. And it's like, those are often the times where it's like the red flags already being raised, where it's like, it's probably not ready just yet. So, when if this, you're expecting this breakout, it goes $1 in your favor. Of course, now it's in hindsight, so it's easy to say, of course, should have sold it at 58. But I think being fully out here, or if it was like that early morning kind of 15 thing where it breaks and comes right back, and you can just trade it versus that low a day. 9 times out of 10, if we're buying a breakout and it's taking out the low day, the stock's not breaking out. Very rarely is the stock going to stop you out here, hold, turn back to 59, and they go to 65. There may be 1 or 2 out of 100 trades where that happens, but for the most part, they're just going to continue that short-term move. So nothing really bad here because you still kind of got out at the right spot. I just think that when they are immediately failing, getting out sooner than later is going to be the easier option. Where this, maybe would have, instead of being a 4% loss, maybe it would have been 2, where you would have lost $25 instead of 60. So not, earth-shattering amounts or even percentages. So nothing to really beat yourself up too much about.
Right. Okay. For sure.
So let's see. So you went back to Oxy. Let's see. So you went back a couple of days later. Okay. Well, it seemed like, sorry, the reloading. Seemed a lot of us were kind of selling in this exact area as well. I was getting out under 74. I know Shake was like selling at the 75. So great job there. And then were you just giving the remainder back to your price?
Yeah, to break even.
Yeah.
That OKE.
Yeah.
Yeah.
It was like a pretty crazy day, like for how strong it looked off the open and then to how crappy it looked. So again, you made a little bit of money, you gave back to break even, and you avoided this disaster. So,
Right.
that was
Yeah. At the time when it's all said and done, right? You think, oh, I should have sold more into the open, but I mean, I never knew it was gonna drop like that.
Yeah.
Right. Nobody did.
I think for me it was a red flag because I had a lot of stock in OK, probably more than I normally trade with, but it just was like the best setup that was out there and the tightest risk. Like I was giving this thing like $1. And this day off the open, I started putting up offers like every 15 cents, like 75.35, 75.48, 75.57, like the whole way up to like 78. Where I'm like, if this thing does want to drift higher today, I'll lighten the load on the way up. But I know for me, has always been like a little bit of a red flag where if I'm very heavy in a name and I start to do that, which typically I'm never selling in the strength, I'm always just kind of getting stopped out. But that's often like a red flag for me where maybe I'm too bullish on the name and maybe this is like the extended part of the move. So when I did that, I put all the orders in, I had that realization and I was like, all right, I'm going to cut these offers in half and raise my stop from break even to under 74. It took me out for half of the position and it bounced whatever. Like if we looked on the 15-minute, I don't know, it bounced, 50 cents, whatever it was. And I'm like, you know what? Let me cancel these offers and put the remainder of the stop under that same kind of 74. It gets me out. And then end of the day looks like shit. And then, obviously got smoked.
That happened.
Yeah.
Yeah.
But that's again, like even for me, like where you were selling at that point, as I was getting stuff in the same area, I too was looking for it to go to 76 and 78 into 80 and nowhere near thinking it was going to come back to 64, like almost unimaginable to think it would come back that far. So that's like those thoughts where when this breakout immediately fails, we're not expecting this to happen. Maybe not to this extent, but the name is more than likely going to pull back much farther than where we're giving our respective stops to. Our stops are, more so for risk mitigation and like proper pivots. So that's where we have to be aware of, like when they are going to fail, it's not going to care that we're giving the name $1. It's still going to probably pull back 5. And that's where it's getting out of those failed ones quicker is also going to be, the better move. And then let's see, you took Oxy one more time. This was, I guess this was maybe before it went.
Yeah, I missed that day where it went. We were talking about it earlier, right? What date is that? So I was just looking at that consolidation, and I was like, oh, maybe it'll break out here. Didn't work, but
Gotcha. Okay.
quickly got out.
Yeah, that's these tight little losses. That's just a part of it. You lost. I think it was 2%, 62, 60. Okay, yeah. A tight little spot. Nothing really crazy there. Let's see. Okay. So let's see. So you bought 58, probably had to stop under like 56.
Yeah.
Did great.
Let's see.
So I think the one thing though with these, like, let's see, so you get like 4 different exits. For me,
I shouldn't do that.
I mean, I think it's okay giving names rooms, but it's again more of like these signs that like you're seeing. So, you bought through the break, it worked. You got this 3-day move. You had an amazing kick like in a strength, doji at highs, indecision, like inside day and down. like that.
That should have been my sign to.
That should have been like, it should have been kick fully out.
Oh,
Because
okay.
at this point, it's like to give it back to here, like I'd be okay with even like if you want to keep one back to break even where, okay, I want to like weather this, see if I can weather that first pullback. And that's like a difficult part, I think, with a lot of people. It's like letting the name pull back and pivot before raising your stop. So I see that one. Where if you want to just give it the, maybe this is going to pull back a couple bucks and turn back up and eventually it's at 60 or, 75 or whatever. But I just don't think you need to like randomly just low a day this 4 days back. Like this should just, I think these two would have been fine. Like you got the quick move, you got a $5-6 move. You still got the majority of it getting stopped out here. And then these two you would have just been out there, I think.
Already. Yeah.
But again,
Okay.
it's still a good trade. Like nothing, he still made good money. He made 4%. But with these last two, had you probably just gotten stopped out of here for more of it, you obviously would have just made a little bit more.
It would have been a lot better than giving it the room. And
yes, I mean, still
to break even.
Yeah, that's what, again, it's like, I think more so with like the first Oxy that failed and that one, it's like the writing's on the wall. Like you're seeing these red days, like multiple days in a row, that's just the signs of like hoping it's going to turn around is less likely than that easy up move that you were a part of. Okay. Yeah, so same thing, these tiered stops. This seems like, again, I know the great spot you're looking to buy wasn't ready. This is the crappier part where when it does go, you're not
involved. Days after, yeah.
That's very common. That was like, it reminds me a lot, John, like the prop days where like we were looking at much smaller time frames and we would take it 2 or 3 times and then we're like, fuck this name, it still works, I'm done with it. And then it goes. And this is kind of the thing where it's like, maybe because you lost 4%, you didn't want to get back into it when it went. And like for me, I got in this day, I had a stop versus 52. This was like a feeler position. So I might even still have like my thing circled. Let's see. Okay, yeah. So I had a feeler position. Really, the entry was 60. And I think we kind of all knew that.
Right.
I snuck in just like you at 59. We all were early. And since for me it was a feeler, I was willing to give it this proper room. And this was one of those times where it pulled back and it did work. So for me, I had my stop versus 52, pulls back that day, the next day, doesn't really break the flag. This day I have a little bit more conviction, this like little day right here. Can you see my chart pretty good?
Yeah, I can. Would that be considered a new pivot right there?
Yeah. So what I'm getting at is like my stop is originally here, first 50. Mm-hmm. This is the real out versus this flag. It pulls in. This day, I'm able to now define my risk, and these circles are a little bit off. I know that now, if it takes out this low here after this day, I know that I'm wrong. So I know at that point, like this day, I can now raise the stop 52 to this 54 area. And now I'm not trying to dollar cost average low. I'm not really trying to buy 56 or any of that stuff like that. But I want to buy back to the name at or above my price. So as it turns back up to 59, and that's what I was buying 3 days ago, this is what I don't really want to add. Like even for you when you got out, like you didn't really want to buy this one back. But that's when we have like the much more higher probability, especially that we also have a much more defined out, because this time I'm anticipating 52 to hold. It's just my assumption. What I'm just, that's just my thought. After this action, it's like a little more defined where now like it actually held this area. It's turning back up. It's much more defined now than it was me anticipating or expecting it this time. So now I do want to add back up at my price. And more importantly, the real breakout is 60. And that's really what I should be buying to begin with from the get-go. And same for you. So I add again there. Now my mistake was, this had a 10% day and I didn't take anything off. That was like my big mistake. And for me, it was like, now I have my full position. It's up 10%. I cannot, now at this point, I can't lose money. Like this would be foolish for me to then say, and even that now that it's still kind of, it's still held this out. And I would have had the opportunity to still, sell up in here anyways. For me, I couldn't lose money in it. So it's like this next day, I know 9 out of 10 times it's coming back to my price and I'm going to break even. And that was for me the trade. I was down a few percent. I added back to it heavy, was up 10%, lost nothing. Still not a great trade, but the same is still setting up. And really, if I still wanted to buy 60 again and still trade over 54, 55, I still could do so. And I'm not like bummed out about the name. It's like I still like my mental capital is still full because I didn't lose anything in it. And that's where, like, with this one, if you bought 59, even if you did get shaken out here, you could have just gotten fully shaken out there and lost, 1 or 2%. Instead of giving me that extra day. Because then it was, I guess you were given it verse 55. So you kind of got shaken out and then it goes. So, that's something where, we both didn't do good with this name. Hopefully we learn.
I have a question regarding, like, because you said, if you wanted to buy through 60 now, would that be something to think about, even though like energy is kind of sector-wise?
Yeah, so
you'd be a little more cautious, I guess.
No, I wouldn't, because really we're seeing 61 really is like, this is now the range. It's like 61 versus 55. This is now like the new range. I was just saying 60 is like more so like with your example where it's like you got shooken out and then like buying 60 that day is really and if this was for whatever reason holding under 60 like all these days, I'd be much more inclined to take it when I want to break. But the fact that it's like kind of wishy-washy, this is like the bigger range, like best case, you're kind of trading in this, that it's still kind of a pass, especially with energy. Even though it's still looking okay, it still has broken this major uptrend, and maybe we get like a push back to highs. Maybe we get a push a little bit higher, but often it's like we get like that move, back to here maybe, but then it's like that slow, methodical kind of roll back over, which we've seen in a lot of the sectors, like we saw with, utilities run, flags, breaks out, flags again, gets exhausted, and then eventually resets. And like energy is still kind of in this kind of space up here where it's getting tired. It just doesn't look as tired yet until it gets that 1 or 2 down days, and then it's back into the range and it doesn't look as pretty as it does at the moment. Same with no, not the reach. Was it other sector? Yeah, material, same thing. Like looked phenomenal into highs, one bad day, and then it's like back, kind of dead smack in the middle of its range.
Okay, yeah, just a question.
Yeah. Let's see, CAH. Okay, great entry. This is again kind of like what we're talking about before, like with the winners, sticking with the game plan, with the ones that fail, getting rid of them as quickly as possible. So this is like, this worked amazing, bullish engulfing, and then like gaps up a little bit the next day, and then you immediately get rid of it. And that's what we don't want to do. That's like with that, like this kick is phenomenal. So you definitely have like really good spots where you're getting rid of like some of these positions. But this is the one where, okay, the name gaps up. Instead of immediately just selling into that opening pop, it's, okay, the low is 59.50. It's 10 o'clock. The first 30 minutes candle is closed. It's trading higher. Let me raise my stop for some. Where if this wants to continue, great. If it's gonna roll over, like OKE, I don't know if you were getting stopped at, if you were kicking like into profits. For me, it was, the name looked good. Let me go on to the 15. All right. So this is like your day two of your CAH. Like it opens, trades amazingly. For OKE, it opens, trades amazingly. And for me, I had those like limit offers up there, but I had that stop under the low of the day. So I had that stop under, if it is going to turn, and you're still going to get out kind of the same spot, like you sold 60, maybe you get out 59.50. It's a 1% difference, but it keeps you in for that next 8% move. And that was like, for me, I didn't want to like, even though I had those offers, up here to take profits. I hadn't sold any yet, but I also had the exit if it wants to roll over. It rolls over, I get stopped out. I get 15 minutes to decide, you know what, this is probably the cue to fully get out. And then I have that second stop, I put back in, I cancel all these orders, and I'm fully out of position, and I avoid this kind of shit show. And for the CAH, where you sold was kind of like the same thing here. This was what, April 8th. So yeah, April 8th. So yeah. So when you sold probably in one of these two candles here.
Yeah, off the open.
Yeah. Had you just gave it the 15, 30 minutes in the winner, the thing that's working, and you say, instead of me selling 60, let me just give it verse 59.50, 59.48 or whatever. And it does rip higher. Then maybe you have, instead of this kick being here, and then your final one, which was like somewhere up here, which was, wherever that was, maybe this one gets replaced, and maybe you sell it high a day. And instead you're selling that 59 up at 62. And then you sell the rest at 64. So you're just moving that like rushed kick to that's like the change. This part, that part is great. This is sick. Is this part that you kind of cap the upside where you could have capped the downside, very much more systematically. And this probably would have been a 10% trade or more, with this kick being like this day or here or even the high. Like again, that day two bullish engulfing, taking profits up here, amazing. Like that's all for that all day long. And if you can sit with it and let it keep going, more power to you.
Better.
I think that's the only little thing here, which is this replacing that with a kick off the open to just raising a stop for some after 30 minutes of trading. Into the little 15-minute candle inside the inside and up, and then you can trade reverse that low. I think will be much more repeatable with the winners.
Okay, I see what you're saying. I think I've noticed a few things with like a couple of the trades. I trade like after 30 minutes. I don't know if that like maybe I should be a little hands off, not do anything at all. Is that something to think about? Like,
so I know
looking to buy, looking to sell, stuff like that.
Yeah. So and I can't really speak exactly for Shake, but we talked about this just in the Shakedown where I'm sorry, not Shakedown, in the chart talk, where like during the prop days, we had to be there super early. We were there for 3 hours before the open. You're basically waiting for like 9:30 in 1 second to happen. The bell would ring, and it's like, then you have to start doing shit because you literally been sitting there for 3 hours, basically doing nothing, like watching the Titanic for that amount of time in front of a computer, and then, shit starts happening. But for us, we had very good, systems that showed us our stats, just as TraderSync. If you go on your TraderSync and you're importing your trades, it's going to show you your times. Like 9:30 to 10 is your worst time of the day, or noon to 12:30 is your worst time. Most people, it's going to be right off the open because it's going to be very reactionary. And that, even for me and Shake, our worst times was 9:30 to 10. And for me, that's why, like, even in the Apple chat, I typically don't really come into the group until later in the day for that exact reason. I'm not looking at stuff at 8 a.m. trying to be ready to buy something at 9:30. Whatever buy stuffs I have in, if they're going to trigger off the open, is what it is, but I've already planned for that. Like for C, this buy stop's been in for 2 weeks and it's nowhere near going to trigger because my trigger is 70 and it's at 66. But if it's going to go up Monday morning at 9:30 through 70 after 2 weeks, that I can't stop. But I'm not going to be putting in a buy stop at 8 a.m. to buy it at 9:30 at 66 today. Like that's because I just know from thousands of trades that like 9:30 to 10 is not my time to shine, as it is with most people. So again, if I have ideas going from the day prior, like orders that are already in, that's different because I'm not planning those off the like right off the open. Those have already been planned. I already have the ideas for them. But going forward for today and going into tomorrow, I put most of my orders in usually around this time or later, 10, 10:30, 11 o'clock, lunchtime, because I'm often planning, for not in this exact moment. Like at some point, this is going to break 70. I don't care when it does, but like that's when I want to be involved, not at this exact moment. I need to go. So again, I can't see those stats on this Trader Sync, but on your like home screen on like the right, it usually shows you a breakdown of like the days of the week. It shows you a breakdown of like the share price, like where you do the best. And it'll show you like you have 9:30 to 10 is your worst time. Like that's the time, and no matter how good things look, because again, every trade in the past during the timer always looked good as well. That's just not the time. And there will be times you'll miss things, but in general, the more you can get away from having to do things off the open that feel rushed, the better it's going to be.
You want to see? I just pulled it up.
Yeah, let me stop sharing so you can share.
All right. Get that 9 o'clock.
Okay, now scroll over to okay. When 15, that's what 3 o'clock.
Yeah.
Okay. So I mean, obviously this is P&L, so this is when you're locking it in. So it's like clearly you're locking in losses off the open, and you're obviously taking profits at the close, which clearly is where you're making the money. You're selling names in more likely into strength, and that's pretty clear there. So it's not like this is like pretty, I don't say cut and dry. It's like you're getting out of your winners off the open, which is smart. You're not holding them to the end of the day, and you're holding your winners to the end of the day. That's kind of like what this is telling me. But let me see if there's go to profit factor. Click on that. Right, like see where's the P&L trade shares.
Do you want me to take off the P&L?
Yeah, you can take it off. Hourly performance. So let's see. So send it. I mean, just see. Let's see. So scroll over. Go to the top of this. Like the little peak. Profit factor is 28%. All right. So let's see. So earnings winner is 60% of your profits come from setup earning winner.
I don't really have that set.
Yeah. Okay.
I'm pretty sure it's a very different.
Yeah.
I never really worked on that.
Yeah. All right. Scroll down a little bit. More. 9, 8. Okay. Jesus. All right. So scroll up a little bit more.
A little more, or is that?
Yeah. Scroll over the top of this, and then can you sort the return loss from high to low?
Oh, okay.
Okay. So 9 a.m. is clearly the worst time. End of day. Let's see. All right. I mean, the one thing where you can see, obviously, for end of day, like 3 o'clock, return 130, returns, I guess, total, return wins 200, losses 80, win rate 70%. So that's kind of what we talk about with like that last kick you had in your name. Clearly, by selling end of day is when you're going to be the most right. Off the open, it's a little bit less of a coin flip. But you obviously, like, this is more like getting out of the name. So that's where it's more of the coin flip, where if the name's failing, you got to get out. If the name's right, you're holding to the end of the day. So at least you're kind of seeing now with the winners, hold them towards the end of the day is often going to be the move.
Okay.
Losers, the ones that are immediately not working off the open, the sooner you can get out of them is going to be the better. And as simple as that sounds, that's really it. It's just that, like, you're going to have these losses off the open or near the open because you have to buy the names at some point. And the sooner you can get out of them, again, the return loss is going to be there because you're locking a loss, but they should be tiny. And that's what you're kind of seeing. Average loser is $20. It's not like a crazy amount of money. But at the end of the day, you're seeing you're way more right because you're holding them. And that's kind of where you're making the money. So I think being a little bit more patient off the open. Again, if it's an idea from the day prior, if it's a buy stop, that look for me, if a buy stop's in, it's going to get in. I'm never really canceling buy stops unless it's like a crazy gap up or it's earnings. But I think for you, it's just, knowing off the open that with the failed ones, quicker you can get out of them, the better. If they're working, wait until towards the end of the day is going to probably be much more beneficial for you. And that's what at least with these kind of stats are.
That's what it's showing.
Yeah. And you're not doing much around noon. You're not doing when like things are really slow in the afternoon. Like that's great that there's really nothing going on between 11, 12, 1 o'clock when that's even when we were trading on the properties, like that was, we would try as hard as we could to go to lunch and, just stay away from the computer because those were the times that just get kind of chopped up. So you're clearly not having an issue with that. So.
Yeah, I think that's around the time I go to work and then gotta do stuff there.
It's good because you don't really want to be in front of the computer the whole day anyways. So that's
mainly kind of towards the end or
yeah, just because again, day 2 bullish engulfing. Okay, let's take a little bit off, or let's raise the break even stop to that low. So if it is going to turn, and that's even something that I've been working on myself. I'm going to share my screen for a second. With like CIV, what is CIV? No, with OKE, for example. For me, a lot of my trades, if you look like on my short thing, it's like a lot of break-even trades, but a lot of trades that were profitable that I gave back to break even. CIV being one of them, up 10%, out for break even. And for me, after looking through a lot of these trades, it's like, damn, even if I was making 2% or 3% or anything, 1%, a lot of these break-even trades, it would dramatically move the performance of my account in a much more positive direction with these very incremental wins. And that's like that was like a realization I've come to more with like OKE, where it's like, all right, let me just take, the couple bucks versus giving it back to break even. Like, let me just lock it in. Don't add it right as it's rolling over, not just like blindly just selling it. So that's something like that I'm like working on. And I feel like with some of these, with your winners, it's kind of just stretched them a little bit further. And with some of these losers, it's not tiering these stops so much. And it's just like, taking that first stop and just moving on with it. And by doing that, instead of having these 2 to 4% losses, you're going to be moving it closer to like 1 to 2% losses. And then your winners, which have been great, 4, 5, 6, 7, 8%, should now be 5 to 10%. That seems to kind of be your range, where now when you're in a name and you're up 5%, you're like, okay, this should be like my first area to take some profits. Okay, I'm up 7%, I can take a little more. All right, I'm up 10%, I can take a little bit more. And I can keep a little bit back to break even or prior low day or however you want to do it. And then like that's kind of like your range, 1 to 2% on the downside, 5 to 10% on the upside. And you have like those percentage marks where most of my trades fall within this range. And when I'm up 10%, I want to hold it back to the grave. Like for me with OKE, that's probably the time to ring the register and just take the money off the table, then giving it back. And I think doing those things will, again, it's not like you have any of these crazy losses. Like you keep these losses very tight, that they'll get even tighter, and those winners will
be greater.
Start to build up at a much bigger capacity. Even this one, this is AMEH, bought in a great spot. So like this was an amazing sell. This was amazing sell. This was again one of those things.
Too early.
This was probably one of those lower day stop ones. Like maybe the 30 minutes, and again it's a little doji, whatever. Your stop's under 94. Next day looks great. Closes basically bullish engulfing. Okay, end of day, raise my stop to 97. Next day opens higher, closes bullish engulfing. End of day, 3 o'clock. Okay, my stop was 97. I raise it to 104.
Jeez.
Next day, fucking absolute insanity. Sold basically to the top. And this is a day. This is like the CIVI like 10% day, like a lesson for me. Next time in it works 10% in one day, you bet your ass I will be taking some profits near the end of the day. And this is one where like this kind of blow off move. This is a huge percentage day, like 1, 2, 3, 4, 5, 6, 7 days up. 7 days, the biggest day. That's usually going to be the top. That's, it's going to be, and that was even like for OKE, again, a couple of red days, but broadly 52 to 65 in a couple of days, big move. And it's as much as we think that, or we want another bullish engulfing day, like we got with, Oxy, like we wanted this big continuation, that will happen from time to time, but taking those profits into those big moves is often going to be the easiest thing, because now it's like, all right, it's at 130, you're giving it back first 110, and now we're talking about risk reward. Your stop was first 110 when you got ticked out, you were giving it 20 points. Well, that amount of risk, were you planning to hold this 100 points higher? That's a question for you. So like you.
Oh, sorry, bro.
Okay.
I'm still trying to process everything. I was like, oh, okay.
So in this example, you kicked it. You had your stop first 110.
Yeah.
This is like 20 points worth of risk, right? Or like P&L you're going to give back. And if you're willing to give back those 20 points, do you think that you were going to be willing to hold this 50 points higher? Or do you think that would have been realistic for it to continue in that capacity?
Jeez.
The answer is probably not.
Yeah. I was like, I don't think I would.
Yeah. So that's where it's like, again, proper stop, and you got out of it great. Even the fact that you got out of it here, even better. That you kind of you held your winner, you let it kind of work its way out, and then you got out at the perfect time. But really more so, it's this kick is probably just a trailing stop. So you like this part you capture somewhere in here, but this bigger day, and it's even a lesson for myself as well. Even I messed this up even with Oxy, where we got this like big move in Oxy, and then it's like it's up 20% in 3 days, little doji, and I did the same thing like with what you did with like here and in the other example. Instead of me just putting the goddamn stop right here, 50-cent difference, I would have been legitimately involved for this next day. And the fact that I don't really kick into profits, I can safely say I would have been involved for this entire move. And I probably would have gotten stopped out here. This is where I would have gotten stopped out. More than likely, I would have held it Friday. Monday had this day. Okay, I moved my stop on that low, and that's legitimately where I got stopped out. A difference of $5, another 10%. But this was like my own mistake where I saw these little dojis, and I'm like, I'm going to be an idiot if tomorrow, this day, it opens and just flushes down to 40 or 42, and I give back this winner. And of course, it does the opposite. So I'm also talking to myself, about your trade. I'm also talking about how I should have done this trade differently. But those are now those lessons where, like, next time I'm in a name that rips and I get these little days of indecision, I can guarantee you my stop is going to be here versus randomly just selling it to make the extra 50 cents or so. But again, this is a phenomenal trade. 22%, sick, all around, just phenomenal trade. But this is the only one. Like, just this being a trailing stop, you take a lot more meat out of that trade than you did, which you still, again, did amazing with it. All right. So I don't want to cut you short. we have about 20 more minutes. I have to have a meeting at 11.
No worries, man. I completely get it. I think we had a good trade review. I appreciate it.
Yeah. No, again, there's a lot of good stuff in here. There's nothing. Usually when we do these reviews, usually kind of the first time or two, it's like, I don't want to say it's a disaster, but it's very inconsistent. Everything is like very erratic. And everything seems pretty on point. There's really nothing that crazy. With the ones that don't work immediately, just getting out of those quicker. And then with the, day 2, day 3 winners, just being a little more patient with them. That's really the only two kind of things here. This AMD, you got it very well with it, made 25%. It looks like, so you got in, you gave this verse. So how did you not get stuffed out of this?
I think we went over it last time. Let me see. But I could say.
No, if we went over last time, that's okay. But this was a great trade. It's just like one of those things where it's like,
it was 90 or whatever. Or what? Where is that? Yeah, 90. Sorry, I have to pull it up.
That's okay. Myself with some of these trades, and you don't look at them for a while, it's hard to remember exactly. But if we did a review last month,
I gave it to that September 20, like that little doji right there. That support. That's below 99.50. It closed at 99.51. I gave it.
I remember now. Yeah, it was like it kept you about like a few cents. I kind of remember now. And then,
yeah.
All right, cool. All right. Let's see. So so just on like April and May. MRO. Okay, we'll do MRO and we'll do SLB for the last two, because these are two that are a little bit bigger percentage wise than the ones we've been looking at.
We did those two already, Ben.
We did?
Yeah, we worked on them. It was with the 15-minute rule last time.
Oh, gotcha. Okay.
Yeah, because you can see right there. Yeah, if I just did the 15-minute rule, I would have been in. Right. Yeah. And that was the lesson from the last review we did for MRO and SLB. That was the main thing we got out of it.
Okay, cool. All right.
Yeah. But other than that, we're pretty good.
Yeah.
So far, so good. I'm realizing an issue that I have, like, just right now with how choppy it is. Like, I'm trying to like trade at the smallest time frame, and I'm realizing no,
it's like
I can't like trying to do 15 minutes or like
it's
scalp. I'm like, this is more difficult than I thought. But I didn't take anything like big loss. It was, I capped it to like maybe 0.25% of
tiny, yeah.
Yeah, it's
good to do it a little bit just to get so not the fear of missing out, but like that it's not all sunshine, like sunshine and rainbows. And I see it a lot with people with options where it's like starting about yesterday, and he was like, I'm using stochastics and fib levels and this, that. I'm like, your average win and loss in your option trades is 20%. When you're wrong, you lose 20%. When you're right, you're making 20%. You're trading the bid-ask spread. You're not trading the chart. You're doing, you're buying it at $1 and selling at $1.20, and the bid-ask spread is $1, $1.10. Like, you're literally bidding in and offering out. Like, that's all. And then you're just adding like these extra links to justify it, but like you're clicking buttons. And for him, obviously not for you. And it was just like, look, you're doing this. This will never work. You're doing all this work. You've already blown up your account. You're not making money doing this. You're spending hours a day doing this for what? For nothing. You can take that same $1,000 and buy Walmart instead of buying options in it. And maybe in a year it's worth $1,500. And it doesn't sound like a lot, but you made $500 doing nothing or very little versus the hour a day or 2 hours a day you're spending fucking looking at the calls and puts, and you're basically just doing the spend anyway. You're not even
looking at fucking numbers.
Yeah.
And so it's been a little like, I just get a little itchy, like, I want to put on a train, so all right, let's get rid of that itch and then take a very small loss. And I'm like, fuck, shouldn't even have done that.
It's now I get it, because like for me now it's like I could not trade for a month or two and like it would not affect my day, because I've just been in the market long enough that it's just another day. It's not like if I miss a reversal or whatever, it's not going to affect me. But I understand that in the beginning, even for myself, it's like every morning, I understand the mindset. But eventually, when you can get more patient with stuff, you can avoid a lot of those trades that don't need to be. And even when they're insignificant, $7, $10, $20, all right, you get 10 of those and it starts to add up. So being able to sit out and wait for those better setups is often way more worth it. And we only really need like one kind of big day out of the market to really get back into that. I'll share my screen briefly. This will be like my last point, where even with like this, like the last time we broke down, like in this area, we were in that like same mindset as we are now, where it's like, oh my God, the market's aging over, the market's going to be dead. And I'm trying to like crudely draw this age pattern out. Like the market's dead, we're smoke, we're going back to zero, whatever. And then we get this day, and that chain, this big gaps down, bullish engulfing, that's the hard out for a while. And again, it's still kind of holding, but that gave us a conviction that now this is our line of the sand. And then we can start to find long opportunities again. And then we get this nice run. Now that it's testing it, and this age pattern looks even worse now because it's way more defined, it's a much higher probability that like this does resolve lower in like the longer term. So I mentioned before, like Mike Wilson, who was a guy that used to work or works where I used to work, is actually a really good like technician. And I definitely agree. Like I still think we can see 360, 340 in the SPY in time, but it's not going to be this like straight shot down there. It's, we get this little shakeout, we get one little strong, we get one or two strong days, we get another bounce, maybe not to high, back to this range, but we get a little bounce, and then we get those roll over. And then eventually we get there, but there's a lot of peaks and troughs until we get there. And these are the times, like these bounces, when if you're stuck in positions, you can offload them and get into cash. And then the fluctuations aren't that big of a concern. And on a long-term standpoint, if you're using M1, it's like we're buying weekly anyways. We want these deals. We want to take advantage of these lower prices because that's how we're going to make money in the long term. And I'm not saying you as in you specifically, I'm saying you broadly, that you and I can't expect this to happen for the next 40 years. There has to be chop, there has to be breakdowns, there has to be corrections in bear markets. These have to happen to have these next legs. Like these just can't be sustainable forever, or else you get like, the moves where the names are just dead forever because they're just unsustainable. They get these vertical moves that go hundreds of percents very quickly, and then they get just kind of crushed. And that's what we need, those pullbacks in between those dramatic rises.
Okay. Completely get it. I think that's something before I used to not understand. I was like, why can't things just go up?
Yeah, that's
right. Why can't everything just go up?
We all want that, but it's hard in the moment because it sucks seeing positions go down. But we forget that they're not as long as we really think. Like we discount how long this 2-year rally was. Like it seems like it was so quick when this was 700 days of an amazing market, that now even if you get a year of a crappy market, that's still fine. It's not like we're gonna get 5 years of that. And some people want to bitch and moan about it, but nothing you can do or I can do about it is going to change what the market's going to do. We just have to try to put our money in the best places that we can and stick to the plans that we have, already set in motion. So
for sure.
So that's great. And I hope this helped. I do have to run, and I'm gonna, once this is done, save the computer, I'll upload it, I'll send you the link. And again, if you want to rewatch it, you can.
Sounds good, Ben.
All right, man.
Thank you, man. Appreciate it.
No problem. You have a good day.
You too, man. See you next time.
Yeah.